earnings beat estimates coming at $2.72 versus the $2.56 that were estimated. Revenues missing estimates coming at $27.91 billion versus the $28.2 billion estimated. Monthly active users also lower than expected, 2.94 billion versus the 2.97 billion expected. And the company says there was softness in the back half of the first quarter that coincided with the war in Ukraine. They expect that to continue into the second quarter. That very much is in line with what Snap said. They also are giving second quarter revenue guidance of between 28 and $30 billion. That is below the consensus of $30.63 billion. I am going to be speaking to Facebook CFO Dave Wehner, and I will be back to you guys with more.
Quickly, Julia, 1.96 I see as the 1.96 billion as the daily active users. That was higher than the prior quarter. As I did mention earlier, they had their first ever drop in DAUs, and that was one of the reasons that it was such a bombshell report. Does this help, with some of those concerns?
I think that might help a little bit. Also, if you look at the fact that the consensus estimates for DAUs was 1.95 billion, so slightly better than expected. I haven't seen the slides yet. Those break out the different regions, and one key thing that we're going to be looking for as soon as we get those slides is whether or not they saw an increase, decrease, or flat daily and monthly active users in the U.S. and Canada. That region is particularly important because that's where they have the highest average revenue per user. So overall, they did grow daily active users. The question is just what happened in that key, most valuable and most saturated region.
Yeah. Julia Boorstin, thank you for that. Alex Kantrowitz, sigh of relief in the market. I mean, look at the stock. It's up nearly 8% in the OT. That's certainly a different story than what happened last time.
Well, the biggest issue last quarter for Facebook was the fact that they were losing users, like you referenced. And if they're able to grow users, then it changes the game for them. You don't really find a way to make your living as a shrinking social network. Look at Pinterest right now. Disastrous, the contraction that they're seeing. Facebook growing, that's important. I think that the revenue guidance is a concern, right? They're still being hit by Apple, probably inflation and other macro factors that we're seeing across the economy. But number one is they have to be able to grow, and they're growing, so that's why the market's reacting.
Josh, that last print last quarter had people wondering perhaps whether we had seen peak Facebook. A first ever drop in DAUs. I'm wondering if we're still thinking that today there is competition to worry about. TikTok and Snap, other things that people are doing today may be different than Instagram. What do you think?
Yeah, and now on the horizon, my friend Dan McMurtry at Super Mugatu on Twitter likes to bet against companies where they end up with a competitor that's like being locked in a cage with an axe-wielding psychopath. A reinvigorated Twitter, don't believe the hype about we're closing down ads. If anything, they may get even more aggressive in competing for eyeballs, for ad revenue, for everything with something like an Instagram. So I don't love the setup here. I like the fact that the stock was able to bounce rather than violate those COVID level lows, which is about 150 to 160 a share. If we're not going to visit those levels tomorrow, I guess that's a good thing. That's somewhat constructive. But technically, this thing is still in no man's land. And as we've learned, don't trust the post-earnings bounce. They almost never last. So far, that's been a pretty good rule of thumb for investors on the day after earnings. Maybe this one will snap that narrative, but until it happens, I wouldn't be saying the coast is clear in this name. It's just a lot of damage and a lot of people trapped in this stock.
It's a big bounce, though, and it could have been awfully worse. Now, I do wonder about, if their revenue projection is at the lower end of the estimates, Liz, if we do need to think about a slowdown in ad spend. It just all goes back to the same topic story that we've been talking about. A slowing economy or small businesses, which are the lifeblood of Facebook. Remember, 90-some-odd% of Facebook's revenue comes from advertising. And if there's a slowdown, that will cause a decrease in revenue. How concerned should we be about a slowing economy hitting a Facebook in the future?
I think we should be concerned about inflation hitting companies' bottom lines and think about the things that go first when companies are trying to cut costs. They lower advertising, they lower sales, they lower marketing expenses. They do that before they lay people off. So I do think that ad spend is going to be pressured in a lot of different places. And I would be being really careful with any companies that are dependent on ad spend until we get to a point where we know that inflation has peaked. We've got some of these really big Fed hikes behind us. And I'd be looking at midsummer at the earliest to start towing into those names.
All right, the letter F is out. That's Ford, of course. Phil LeBeau with that. Hi, Phil.
Hey.